Hey guys, and welcome back to Moonshot Money. Oil prices are up again, and experts are saying that gas prices are going to continue rising until the summer. Are you kidding me? Exploding fuel prices are causing everything to get more expensive. Is there a way to turn the pain at the pump into a stream of income headed into your pockets? That's today's question. I'm Chase, and this is the Moonshot Money channel. Are you ready? Let's go. This is not investing advice. Please do your own due diligence. We just heard on the news that oil prices are at a 7-year high. As you know, everything is transported around the country by fuel. So everything is more expensive now. Fast food, groceries, building materials, you name it. We also heard that oil prices are forecasted to climb at least till June. Well, that's just peachy. All this means is money pouring out of our pockets every time you turn around. Is there a way to play this to our advantage? We think there is. There are big oil stocks. For a little while now, we have been buying Chevron, Exxon, and Enbridge. Chevron is near the 52-week high, but we believe the price will continue to climb for a little while as oil supply continues to be restricted. Chevron pays out a wonderful 4.12% dividend as well and is a monster energy company. So far, so good. Exxon is also bumping up against its 52-week high, but the same theory applies here too. We are buyers. The dividend is 4.86%, and while it doesn't replace the increased pump prices, it helps to know that some of that profit, though, is coming back through dividends. Like Chevron, Exxon is an old company and isn't going anywhere. We are also buying Enbridge. In case Enbridge is new to you, ticker ENB is one of the largest midstream companies in North America, with more miles of oil pipeline than any other competitor. It's number 2 in natural gas as well. What really gets us excited is Enbridge has a generous 6.2% dividend yield, backed by more than 25 years of annual increases. As I've already mentioned, global energy shortages have confirmed again that pipeline assets will remain essential. According to Al Minocha, Enbridge's CEO, the $97.5 billion pipeline giant knows its essential role in addressing global energy shortages in the coming years. He also said, "We plan to continue to invest in low carbon opportunities that leverage our existing assets and provide a platform for future growth." If you take the time to do a deep dive into Enbridge, the investment, we believe that you will like what you see. Now, let's look at the other end of the fueling spectrum, and that is the electric vehicle charging. Is it early to be buying these? Yes it is, but the price just may be right. We own and are adding to ChargePoint. The government certainly believes that electric vehicles are the future of transportation. Electric vehicles can make transportation much cleaner than it is today. The recently passed bipartisan infrastructure law provides for a $7.5 billion investment in EV charging infrastructure. That's a good thing. The government aims to develop a network of 500,000 public chargers by 2030, representing a 5-fold increase from the number of public chargers in the United States right now. By 2030, so yes, this is early, but we will be glad that we bought ChargePoint by then. Despite strong expected growth, ChargePoint stock fell more than 50% in 2021. And as of this filming, it's right at its 52-week low. ChargePoint owns a charging network of 163,000 charging ports, 45,000 of which are in Europe. The market cap is $4.8 billion. We said this way back, but this is like playing John D. Rockefeller at the turn of the 20th century. As you know so well, these growth and tech stocks have already been clobbered. There's no dividend, and we can't tell you there's an immediate price appreciation, but we do believe that in the future it will provide to be a very exciting investment for those of you who own big chunks of ChargePoint. Then there's Blink charging. The infrastructure law will be hugely beneficial to Blink as well as ChargePoint. Blink charging stock is lower by 45% over the last 12 months, but the average rating from Wall Street analysts is a buy. The average price target is $41, which means analysts expect the stock to gain about 50% over the next 12 months. Fingers crossed. For the long-term investor like us, these prices are pretty attractive if you want to be a part of the future of fueling transportation. The market cap for Blink is almost $1.1 billion. Pretty small, pretty young. Finally, our EV charging investment portfolio would not be complete without owning the massive charging network belonging to Tesla. Tesla recently announced that it installed a new supercharger station in Hawaii, which means that the supercharger network is now officially in all 50 states. Tesla previously announced as well that it reached the new milestone of 30,000 superchargers worldwide. And last summer, it was reported that Tesla was gearing up for a giant supercharger network expansion, just ahead of opening its network to other EVs. This move coincides within the infrastructure law as well as one of the requirements to get access to the funds that its charging stations are open to vehicles from more than one automaker. By opening its network, Tesla will increase traffic, yes, but it will also have access to more infrastructure funds to grow the network faster. And Tesla plans to grow its supercharger network quickly. You are feeling the pain at the pump now, and there's no relief in sight. But we've given you ways to make up some of those losses now through dividends and rising oil prices, and ways to score later with rock bottom EV charging stocks. Take a moment, hit that like button down below. It's free and easy, and it helps us out big time. If you enjoy our content, please hit subscribe as well. You can also catch our daily thoughts by following us on Twitter at MoonshotMoney1. We are there posting most weekdays. Be sure to watch our weekly roundup video on Friday as well. Leave us a comment below. We try our best to respond back to all of you. We hope you have a great rest of the week and weekend. Earn more, save more, invest more, and give much more. And hey, I'll see you on the moon.